we're sort of a firm that really values the optionality of holding cash and limiting your market exposure. It's very rare that we're invested, even a high 90% basis. So we tend to be pretty cash heavy.
I reckon we like what you were saying there, Manny. Let's jump in with everything that's happening in the market right now. It's just bonkers. It's crazy. There's so much to see and do and read and keep up to speed with. So how are you sort of feeling about the markets at the moment?
Yeah, I think markets have been incredibly strong and in true sort of risk on mode, I should say. And yeah, it just feels like there's a real sort of flight to being long assets, not only in commodities, but across the spectrum, I would say. And a lot of that is, of course, driven by very accommodative US monetary policy. And well, it's great to see to see markets so buoyant after
Yeah.
after some years of being not so buoyant, especially in the commodity space.
Are you feeling pretty preoccupied with the macro environment at the moment, and then just trying to break down and do your research on the company specifically as much as you can too?
Yeah, absolutely. So I think it reminds me of years past in many ways, and I think that when I think back, this reminds me a lot of let's call it the years 2006 and 2007, which was truly sort of in risk on mode across all asset classes, even things like metals technology that we've seen so much of, and defense stocks ripping so hard. It truly feels like history's rhyming here in some degree, but you really, as an active sort of investor, you've actually got to be very careful about being overly bullish. You can make a hell of a lot of money in these sort of environments, which is why we're all here. But you've also got to be thinking about, well, how do I go to liquidity if required?
Let's jump into that 2006-07 analogy a bit deeper. What are the other sort of things that ring sort of similar?
I think that I always recall at the time we had disruptions in uranium supply at that stage. Today we're seeing sort of a similar sort of dynamic in copper, most prominently, I'd say. We've seen, I think it was Grasberg, an accident there that looks like it'll affect production just in the last few days. Then we've also got a number of other very, globally significant mines that are, producing at lower levels than anticipated. So it's a similar sort of setup in that respect. And, I think also, things like, you know, new and novel methods of metal recovery. That was something that was actually very, popular back in 2006, 2007. And
This is before our time, so like, I'm so curious about this because I know history repeats and it looks like similar but different. But that is absolutely a theme at the moment. Is the kind of hype around new technologies that can come in lower on the cost curve for some niche metal or multiple metals. And these stocks are the flavour of the month. They fly. They don't have to prove anything just yet. They just need some contract or government support to say that they might work.
Yeah, that's absolutely right. And, just that metal recovery angle is something that has become so, it seems like it's very strategically important, particularly for, the US sort of supply chains. Back in 06, 07, it was, the same sort of thing. It was more sort of to do with tailings recovery and other sort of, secondary sources or technological breakthroughs. I don't think any of those companies ever were successful, incidentally. But, technology has advanced since then. So you just never know, right, with these things, what might come about. Investors have clearly bid up a whole range of stocks in this sector because they want to have exposure should these various forms of technology be able to scale up and achieve a commercial size, which is going to be a tough job. It's not a given and that's what I've learned from experience. Yeah.
So
I'm so curious. I'm so curious if you how you interpret those yeah investment opportunities. Do you
Mm.
still participate on the premise of like, okay, I can see there's going to be hype. I can see that there's going to be, retail interest. I can see that there's going to be a re-rate on these things alone. I'll get in and get out. Or do you just sit on the sidelines?
We tend to sit on the sidelines. I think a lot of that ultimately comes down to experience. It's like, it's almost like you can often make a lot of money by being naive, which is what happened to me basically, 06, 07. But you have to be very conscious of that. You couldn't buy the ticket, take the ride, but you've got to have a very clear view of when you're going to get off the bus. Ultimately, in me today, I think that we're not. We're more disciplined, I guess, than I was in the past in investing in these sort of technologies, and having scars from the previous experience. That's definitely sort of made me a lot more skeptical of so-called claimed technological breakthroughs and new processes and all the rest.
if we think about the government intervention as opposed just to the
Mm.
quote unquote tech breakthroughs, how do you think
Mhm.
that actually permanently, or at least in the medium term, changes the playing field for commodities?
I think that ultimately a lot depends on whether these breakthroughs actually work in the medium term. Um, I I believe that recovering um, secondary sources of metal, if you would, rather than primary, is always going to be a harder sort of task to do, just purely because to recover primary metals from ores, it's basically a lot cheaper to do, and it doesn't come with the same sort of logistical issues and the number of counterparties that you need to deal with in, let's call it, sourcing circuit stock, circuit board feedstock, for instance. There's a lot of hoops to jump through just to secure the supply. Whereas with primary metal recovery, you're typically dealing with only a couple of authorities, if you would, and from a single source, right? So that's just how I view things from the top down, and through a very practical, common sense approach, right?
Yeah. One of the points you kind of hit on earlier was just
Hmm.
having the ability to have liquidity when things kind of go from froth to fizzle. For you, does that just look like a substantial defensive positioning in
Hmm.
gold stocks, or more liquidity, or like what how do you think about that part?
Yeah, sure. So I guess at the portfolio level, um, we're sort of a firm that really values the optionality of holding cash
Yeah.
and limiting unit market exposure. It's very rare that we're sort of invested on even a high 90% basis. So we tend to be pretty cash heavy. We're probably fairly cash heavy at the moment. We're probably holding about 20% cash, but pleasingly we've been able to sort of keep up with the broader market, despite having sort of lower market exposure. And if things go south quickly, we'll be in a really good position. So that's where you really make your money, by buying well when everyone else is a forced seller. So that sort of philosophy has worked really well for us over many years.
So part of that keeping up with the market has been your allocation to gold, which you've done really well in. And we've
Yeah.
spoken about this over the years, but things have really accelerated recently. How are you thinking about it, like right here, right now, about your
Mm.
allocation?
Yeah, sure. So I think that gold has just had a fantastic run. Uh, there's been so much demand that's basically been pushing up spot prices. And I read a really interesting observation just in this last week, and it was just comparing it's the sort of weight of capital and the number of tons being bought on the gold market by passive ETFs relative to central banks. And it was just enormous, the sort of passive flow that appears to be coming into, gold ETFs. So, perhaps this strong gold price performance is actually being driven by greater awareness, from mainstream investors that are, well, maybe we need to have, a small, like 2 or 5% position allocated to gold in our portfolios. So that's pretty exciting, I would say, because, central bank buying, it's such a black box, right? You just never know what may happen, despite long-term strategic plans and rhetoric, if you would, from the major central governments. But what if you have sort of embedded in the mainstream investor psyche that, oh, well, maybe my portfolio does need to have a 5% gold allocation. The upside is actually significantly more, um, or could be significantly more in terms of future gold price upside. But saying that, I'm not a gold permeable by any means, but and there are other asset classes to invest in, what's clearly an age of financialization and debasement of currencies worldwide, right? Doesn't necessarily matter what the asset is, as long as it's something like a hard asset and is recognized by other investors as having value, then those are the assets you want to be long, and everything else is sort of all this punchier stuff on that we mentioned is really what would you call it? It's an ancillary effect. That's how I view it.
Within the gold kind of part of the the hard asset equation, today's underperformer is tomorrow's outperformer. It appears with the gold names, like, for example, Vault, since just announcing a buyback, up 55% in the space of like a matter of weeks. Truly remarkable that happens, and they were one of the underperformers before then. Where are you seeing relative value in the producers?
We had exposure to sort of a broad suite of those mid-cap producers like Volt and Genesis, Ramelius, all the rest of them. I think that they've had incredible performance in recent times, as you pointed out. So I guess the problem for the sort of challenge for us is that where is the value now that these have become the multiples have increased, they've become probably more fairly valued than they were, let's call it 3 months ago. And I think that there's a lot of value in the next or sort of the smaller producers. I'm thinking producers like Meeka Metals, for instance, that are just going through their own sort of ramp up, and they're sort of in the Murchison belt, which has been sort of a secondary belt in recent years, but now we're seeing obviously production out of companies like Catalyst and Westgold in that region. And if you're a producer being sort of valued at a significantly higher multiple than you were, let's call it 6 months ago, how do you capture or enhance the value in your company, right? In a way that's independent of the commodity price in isolation. And I think to me that means that, well, the most obvious way is to secure more ore, right? And really kick out those LOMs effectively. And so I think that in the Murchison in particular, you've got a couple of smaller producers like Meeka. Then you've got sort of small companies that are sitting on deposits that weren't really considered too valuable, let's call it a year ago, but now all of a sudden the equation's really changed. So like the Great Boulder, the Odysseys of the world that are fairly small, but they hold a valuable sort of resource now, effectively.
Great Boulder is very interesting in the sense that you could totally understand the value proposition of the value of those ounces to a nearby mill, but they haven't had the same share price re-rate of
Yeah.
of many of the other undeveloped projects in the vicinity.
Yeah, I think that it's always uh, it can be tricky with the small players because if I mean they're clearly not sort of number one on anyone's list for if someone wants gold exposure, full stop, right? So so the teams of these sort of smaller companies really have to be out on the road and providing comfort to investors that they've got a plan. The plan has probably a shorter term sort of range of catalysts that will add value to shareholders to attract the money effectively. In a roaring gold bull market, no one wants to be in the stock that doesn't move ultimately, and that's always the tricky thing as an investor, right? That you don't want to be. Yeah, if you want exposure, you have to really take a portfolio sort of approach with it all just to mitigate that risk.
Now, Trav, investors might be having a tough time picking goldies because there's so many good ones to pick from. But good thing for the gold companies themselves, picking ground support is easy because there's only one name to know.
Sandvik Ground Support.
Sandvik Ground Support. Product produced here locally in Kewdale, WA, for the whole of Western Australia and the broader Australian mining industry. There's only one name you need to know in ground support, and that's Sandvik Ground Support.
Mate, I don't think there are other names in ground support. No, it's Sandvik or it's Sandvik. It used to be DSI, so that name
That was
is
the
out
name,
there.
yeah. That
But
name still lingers in the memory.
yeah, but it is Sandvik Ground Support.
And we had the privilege for the money miners. We did a bit of quality assurance and quality control down at the facility a couple of weeks back just to suss out that what they're doing is the highest quality work, and rest assured it is.
I was super impressed, mate. People that work there take a lot of pride in what they're doing.
They do. Look at the
Manufacturing-
footage we're overlaying right now. Check that out.
Unreal, mate.
Unreal.
What'd you learn there?
I learnt what the process of galvanisation is like, mate, and it is quite special. Biggest facility in the Southern Hemisphere, here locally on the outskirts of Perth, doing God's work for the mining industry in Australia.
Mate, you need galvanisation if you want to be, just durable throughout.
You want stuff to last forever.
It kind of does last forever.
That's it. 4, 5, 6 coats.
Just like Sandvik Ground Support lasts forever in our minds, your minds, and you're going to remember them when you need Sandvik Ground Support. Go Sandvik.
Have you gone all the way down? I know we previously spoken about some real explorers and juniors. Are you still allocating much to that end of town?
We do have a small allocation to that I guess, sort of company. Perhaps another belt that would be good to talk on would be, the Southern Cross Belt, which is, once again, it has been a secondary belt in the past, but you've got sort of a range of juniors. Golden Horse is probably one of the biggest ones there. And you've got FRS and TG6 as well.
What the heck is going on with FRS? This is just what I can't believe this company's kind of just doing deals left every day. There's a new deal, and I can't. Stock's ramped to crazy on and it just seems to be doing a new deal every day, just buying everything in the vicinity.
Yeah. Well, it really comes down to the management teams, right? That we've seen the new MD there join in a very short space of time put his foot on what's growing to become a reasonable size of asset ultimately in a gold bull market, and they've been very aggressive about it, right? So
yeah,
that's generally viewed favorably by investors. That if someone's not just going to sit on their hands and do nothing, right? You've got someone who's clearly motivated and aligned to bulking out, the inventory of the company itself.
And with Golden Horse, what's the core thesis with their portfolio at this stage? Do you see it kind of just supporting one of the nearby mills in either the Southern Cross operation or Ramelius's plant?
Yeah, I think that they clearly hold a dominant position in the belt, and they've sort of gone about trying to, I guess, firm up that resource base, which they seem to be doing reasonably successfully, I'd say. There's still, some way to go though. I think that, could they be a standalone? Uh, what does standalone, how big does standalone need to be in this gold price environment? That's what my first thought is. Previously, it was 1 million ounces, but could it be lower? I think it could be. But then, how do you ultimately, let's just say you can get, milling capacity or buy a plant or whatever it is. How does that look and how can it be supported? So there's a few different factors there, but what we like about the company is that the land position is significant, and that's going to be of significant value, ultimately, and they've been sort of drilling successfully for some time now, and they still seem to be sort of fairly under-owned, I would say, um, purely just because they've obviously just shifted across to the ASX, whereas from the TSX listing that they were on in the past.
Yeah. Another belt that I know you had some exposure to in the past was the Great Yandal belt via the
Mm.
company Yandal, who's had a bit of a run in the last couple of days on the back of proving up the Icarus discovery. Are you still pretty buoyant about the outlook for Yandal?
I think the latest results out of Arrakis were interesting. I think that it shows that there is some level of continuity there. However, it is sort of very, very early days there, I would say, still.
Yeah.
It's going to take time, effort, money, all the rest of it to really sort of determine if Arrakis is a economic resource. And yeah, I think that, they've got a good team. They've got, a reasonable amount of funding, from my understanding, and a good register. So
Are you worried about that register component with gold, gold, now Gold Fields effectively owning a stake, which, yeah, could be monetized. Previously, where Gold Road were a supporter.
yeah, yeah, I think that um, to me it makes sense that Goldfields may divest if someone, comes knocking on the door looking for stock, then it's really, not at their sort of scale as yet. It could, still yet to be proven. But yeah, I think that, it's been such a prospective belt over many years that uh, it's difficult to say, or predict the future with these things. But great sort of, it's all about location, right? And they've got their foot in a great location, and it's just going to take time and effort and money to determine if there's anything worth finding there.
Manny, if we zoom out for a moment, how do you actually think about the portfolio allocation to gold and how you sort of size the positions for all the companies we've just mentioned in amongst your broader portfolio?
Yeah, sure. So I think that obviously with supporting explorers, you've got to be conscious about how much or how large a size you're willing to run in your portfolio. So for a junior, we'll typically be fairly small, I would say, probably like sub 3 or 4% is probably where we'd top out, from a portfolio level. Whereas you can take more risk, sort of the further you get, or the closer you get to producer. So development companies, um, we'd be happy to take, I don't know, 5 or 6%. Producers, you might go up to 7 or so percent, 7, 8%. Just really horses for courses, and what you're actually trying to capture
Yeah.
um, from a portfolio perspective.
Yeah. Yeah. There's actually one more individual Goldie that I wanted to chat with you about, Manny, and I know you've spoken about it in the past. It was Predictive Discovery over in in West Africa. Are you still long that one?
No, we are not. And that was a sort of a very conscious effort, conscious decision, I should say, to trim African gold stocks. Thankfully, just before things got a bit dicey. And the way I thought about that is that you see great assets like PDI and WAF was one of our exposures in the past, and one thing that's not often thought about is that, as gold prices rip in jurisdictions with, weak rule of law, if you would, that's when these assets become increasingly attractive for governments to, put their foot on or nationalize or get involved and just be a disruption basically to the asset's owner. And we've seen that play out in with WAF, and there's not too much you can really do about it, unfortunately. We've seen other instances like Kingsgate KCN, where the Thai government basically tried to nationalize their mine, and it took many years to resolve, right? And
Arbitration. Yeah.
they managed to sort of thankfully get control back of the asset and seem to be doing quite well these days. But that's a real sort of risk when you're investing overseas. So I think about you see development projects that actually really they seem to be really sound, like Tesoro is one I can think of, or Santana. Oh, Tesoro's in Chile, which is a sort of a well-recognized mining jurisdiction, but you see the presence of majors and the ability to do business there. It's a lot lower risk than Africa, and Santana that I mentioned is New Zealand, so almost like Australia, but comes with its own sort of
Almost.
risks. Almost, yeah. So these are sort of, if I'm going to invest in a developer, these are probably the sort of assets that I'd rather have exposure to than a PDI, right? Which is probably in a spicier jurisdiction, in my view.
Makes sense. I am kind of curious, like if you were like of all of the types of commodities, like all of the commodities out there right now, like if the asset quality was all the same, like what would you most be tempted to allocate towards kind of right now, if every opportunity was equal?
It just really depends on your time, on your duration, I guess, your investment horizon. I think that gold can continue to provide punchy returns in the short term. But over sort of the medium term and onwards, that's when you really have to think about, well, what's the demand going to be for how's technology going to progress? What does the world need, etc. And that's when you come back to things like copper. That's obviously a sort of mineral that's hard to find in good quantities and in good resources. But then you have things like niobium that are clearly going to be extremely important to future technology and material science and all the rest of it. So
Oh, you've created
yeah.
a layup to talk about WA1 here, buddy. Ding, ding, ding.
It's a big ding, ding,
I don't think
ding, yeah.
we've ever had a conversation with you where we don't talk about WA1. It's been a mainstay of your
been too long.
portfolio and of your fund's performance, of course. But it's really interesting to watch the consistency of your support, kind of through what is an orphan period in the Lassonde curve. Are you a believer that the Lassonde curve kind of doesn't matter when you have the asset quality?
I think it matters irrespective.
Right.
I think we've obviously seen WA1 trade, almost, I think the peak was about 22 or $23 at one stage. And, it pretty much halved from there and has come back quite strongly now
Yep.
that they've de-risked their funding, etc. And look, I think my views are very clear on, just the absolute unicorn quality of this ore deposit. And that's only strengthened over time. Like we've seen catalysts like the ability to produce niobium oxide from the deposit itself, which is just it's an enormous breakthrough, and one that was totally unexpected. I thought that it'll take him 2 or 3 years at least, but it just happened, right? And that to me, it really demonstrates how great a quality this resource is, and these things only get more valuable over time, right? And they haven't even defined the extent of the resource. So that's, one of those problems that you just set and forget and come back in 10 years. And yeah, it just has all the, factors that we love. And all we need is a Department of Defense contract, right, from the US. So hopefully the team are working on that.
Do you think something like that is likely? Like, do you think it lends itself to a strategic deal with all of the US activity at the moment?
Yeah, well, look, it's going to be the world's only producing niobium asset with no Chinese ownership, right? And that's a it's just flabbergasting when you think about it, right? That every single producing niobium mine on Earth has um, a Chinese owner in the ownership structure itself. This is the one that's only, it's the jurisdiction, the ownership structure, everything sort of speaks for itself. So that makes it highly strategic in its own right. That it reminds me a little. I made this analogy before about Linus and the highly strategic nature and value in the resource itself. So I view this as being, an analogy, but if not better, because rare earths are hard to deal with, as we all know, but they seem to have really been able to sort of crack the niobium recovery um, uh, for this ore deposit. So it's all really exciting, yeah, over the medium term.
Mm. I'm super excited to talk about Linus, but a couple more on WA1 first.
Hmm.
When do you think the timing would make sense for an arrangement like this? Like we are still relatively early in the discovery, understanding, and study process of WA1. So how do you think about that evolution, and when joint ventures with, be it government or major strategics make sense?
Yeah, it's a good question. I would probably intuitively say that it would probably be post studies, I would say. I think the challenge is with this resource, it's just so tremendously huge, over 200 million tons. It's sort of a major sized asset, so that means it'll have probably a longer time frame than if it was just like a little um, 20 million ton, resource that was constrained. But I think that that does kick out the time frame somewhat, but it only increases the value, right? As we've talked about, like life of mine isn't going to be a problem. This was an asset that'll be producing longer than any of our lifetimes, right?
Yeah.
Ultimately, and true sort of multi-generational asset. So, I think that as a shareholder, I'm happy to let the team do things the right way and take their time, and that's ultimately going to be a benefit to all shareholders and the nation as well, right?
How do you think about the neighbour encounter, which has now demonstrated that they have high grade niobium themselves? Would you prefer to see some form of consolidation so that there's like one ex China champion and you don't have maybe extra supply come onto the market that would be in a very small market? Like, would you prefer to see consolidation in due course there, or are you kind of just happy for things to run their course if there are two players?
Yeah, I don't think Encounter have a commercial resource or an economic resource at the moment. I think a lot of it comes down to um, the difference in methodology. So, Encounter have obviously made a resource estimate primarily off air core drilling, very widely spaced. So there's a lot of what I'd call inference of what the resource is. So it's a much lower sort of confidence estimate, but it's also, significantly smaller than what WA1 have. And I think probably another sort of small pet peeve I have is that they haven't sort of disclosed the full multi-elemental suite in the assays itself. So I don't know if if the ore's radioactive, for instance, if there are elevated thorium or uranium results in there. Who knows, right? So that to me sort of downgrades the project or makes it sort of less likely that it is a commercial proposition if the company are not comfortable making those disclosures. Um, so yeah, I don't think that consolidation is necessary, especially when you've got an ore deposit that.
That is, yeah, it's an interesting one to sort of follow, and yeah, they continue to come out with bits and pieces of results, but the neurology type plays and people jumping on the niobium bandwagon as well is not just limited to the companies surrounding WA1. We're starting to see it more and more across the world and in Brazil and parts of Africa as well. So it's something to kind of follow.
No, now it's antimony neurology. Now,
that one's taken off.
It's just MP materials neurology now. It's the trend. My goodness.
That's right. And I think that, look, just to be clear, I think Encounter do hold some great ground, but I think that niobium was the flavor of the month, right? At the time of the discovery. And they've obviously defined some sort of resource, but I like their copper ground, for instance, Encounter, and I've always tell them that don't talk to me about niobium. I want to know about your copper stuff, and they seem to be having some success there. So I hope they do find a big copper discovery in the West Arunta, and I mean ultimately. It all comes down to infrastructure, right? This is such a remote part of the world, but the potential for big discoveries is so significant. I do expect there'll be more discoveries found here over time, and you can see, that in other small juniors, right? Like Tali Resources that are sort of the little brother, or considered the little brother of WA1, but further to the south there, and I think that look. These sort of propositions, in terms of like Encounter and Tali, they're sort of high risk, high reward, and the return profile is very and nature of the company is very different from a WA1, for instance.
The elusive IOCG deposit was what WA1 were hunting for after all. If we jump onto Lynas now, Manny, what do you think they're going to buy with all that money?
Ooh, that's a good question. I think that it feels like Iluka are putting their foot on a lot of resources and trying to sort of get that feedstock for the rare earth refinery that they're building in WA. What Lynas do, I think that Lynas will probably become more US centric, given that's where the market is at the moment. As you said, the MP Metals deal, they also had an agreement there for, a heavy rare earth recovery plant that they announced, I think, 2 or 3 years ago. So I think that Lynas business will become increasingly more US focused, or try and crack that sort of supplying the US, given the clear push towards re-onshoring to the US. So that's my sort of opinion and what I think makes sense.
Yeah, very interesting. I feel like I've ages ago read you tweet about antimony. Maybe when it was just kind of becoming flavor of the month. like I don't know, 18 months ago or something, and the persistence in the retail interest and attention in antimony. Maybe it was you that coined anti-money. Well, it might have been the first time I ever read anti-money. I thought that was hilarious. So
Yeah, yeah.
I'm kind of just like keen to peel into your views on anti-money or antimony.
Yeah, yeah. Well, I should have called it pro money because it's gone so well. So I was clearly wrong there. But yeah, look, I think antimony is, just it's a niche metal that is, highly concentrated, in Chinese hands, and an industry absolutely controlled by the Chinese smelters. I think that, you know. I think from my observation, there's a lot of antimony around, but to really commercialize these deposits, it's hard work. And look, it's going to be you can't just develop an industry overnight or in a very short time. That's my sort of feel about it. So I think that it'll take a very long, it'll only happen over a very long time period. And I going back to Linus again because Linus's view was to basically provide an ex-Chinese, source of rare earths and to try and break the stranglehold on the industry. I look at it today. Linus probably have about 10% of the upstream production globally or thereabouts. But all the separation is still controlled by the Chinese. So sure, they made a small impact in one part of the supply chain, but not so much in sort of downstream separation. So I think that despite the move towards antimony, that it's going to be a tough nut to crack, in terms of supply or encouraging that diversity of supply, I should say.
It's funny looking about all the explorers and juniors hunting down, and you think of a company like Allocation that actually produces in Victoria antimony, and they're not getting any of the rub of the green for it, despite actually producing some of the stuff.
They've had a big re-rate off of the back of the completion of the Mandalay.
They've done super well, yeah.
But it wasn't immediate. It was that was kind of like a no-brainer. In the whole merit of the deal was scale for index appeal, and that's exactly what happened, right?
Yeah, absolutely. And I think that, we've seen a number, I guess, of these transactions just to, bulk up to get index inclusion. So it really does sort of demonstrate, right, how important these passive flows are becoming, not only at the company level, but at the commodity level itself, right? So
it probably underpins maybe like the appeal of the type of company that is just below the threshold. Like you mentioned Meeka before, right? But like if Meeka might naturally re-rate as they ramp up and the likes, but there's also like pretty obvious merit for them to do a deal with someone who's like a $200 million market cap or the likes, and then
yeah. Yeah, well, if you're a catalyst, let's say, that, have been good at cutting deals and,
Sure.
they're right next door and, they could do with another, 60,000 odd ounces to their portfolio and, next door to their plutonic operation, for instance. So that they're very, and they're, multiples of Meeka's market cap on, a larger production base, but that's a very obvious sort of candidate, right? That I would expect.
Yeah.
Companies of that nature rather than, and I think that those sort of transactions in terms of, larger companies buying smaller companies is probably the way I'm sort of seeing things playing out, rather than, consolidation of small companies like the Alkane Mandalay merger that you discussed. It's probably going to be more, big fish eat little fish at this stage, I'd say.
If we think about the other inflation hedges and companies that have done well for this sort of same type narrative, silver springs to mind. Have you got any exposure to silver, Manny?
No, because I think that just I mean, our last one was Adriatic. That
Mm.
is obviously part of Dundee now. And look, I'd probably say, um, the junior silver space in the ASX, it's a pretty bare cupboard, right? Because just by the nature of, the low value nature, I guess, of these deposits, right? And sure, they've become higher value over the past year or so.
Platinum, palladium, PGMs. They're they're a bit of a flavor. Like we're interested in them. The rhetoric is interesting. Platinum's just best performer year to date. Have you been exposed to that as a real asset?
No, not at all.
Yeah.
None of the platinum or PGs or
Yep.
anything like that. But it really does sort of exemplify, right, that the rush towards any sort of hard asset. And I don't know how, like, I'm not obviously not a PG or platinum expert, but I just often wonder about what the supply and demand dynamics are, what the justification behind, the price rises has been from, metals that are fairly niche in nature.
Yeah.
Yeah.
Well, that's actually a really interesting point of discussion because one thing we did here was like there's been absolute plethora of new traders setting up precious metals trading desks,
Mm.
and whenever that does happen, there's often like some short term, yeah, like price squeezes in the smaller markets. So might be able to explain some of the health
Mm.
of the prices in those metals. Yeah.
Yeah. Yeah.
If we keep going with the niche metal runaround, we've spoken in the past, Manny, about Metals X. I
Mm.
believe you're still a holder, and that's obviously one of only two Western ways to get exposure. But
Mm.
the tin narrative has been fascinating the last year. Where are you sort of placed in that and thinking about it going forward from here?
Yeah, sure. So I think that tin is only a small part of our portfolio in Metals X. And yeah, look, it's one of those that I don't think the supply and demand dynamic has changed, by materially, I would say. And it just seems to be driven more by, this flight towards miners that are actually producing cash, right? And Metals X has been a value play for a long time. So I'm not surprised by, the recent uptick in the company's value. Um, and we just hope the management team are, they've obviously gone out in recent times to put their foot on various tin or other sort of tin development assets, which I think really does show what the expectation is, right, in the coming years. They're hoping or probably expecting or want to be well placed for a time, when in the future when, perhaps tin suppliers are more constrained and they can probably capture a lot more upside, assuming that that falls to, or pushes up the tin price. So that's when these sort of fairly marginal deposits and projects become probably quite attractive in a higher price environment at some stage in the future.
Totally. Totally. Yeah. The in the copper world, there's just a real like there's so limited bite-sized opportunities or like copper developers that are
Yeah.
investable for geologic reasons. But um,
Mm.
I suspect you're the kind of investor that often does try and play commodities via developers.
Mm.
Are there copper developers right now that you're allocating to or have allocations to?
I think that it's quite difficult to find really attractive copper exposure, I would say, on the ASX. I think there's a whole sort of laundry list of companies that have been working development projects for a long time. I'm thinking things like Peel or
Your management? Yeah.
yeah, or Hillgrove or Havilah. There's a whole range of
Yeah.
of of companies out there that are sitting on sort of deposits that weren't economic in or haven't been economic in the past, but maybe they're sort of getting towards
Ding ding
the
ding ding
ability
ding
to
on
achieve.
both Metals X and Havala. I should really disclose, but yeah. So you've run the numbers over these companies, and are you thinking that they're interesting, or are you sort of maybe
I
waiting
think
for more catalysts?
Yeah, I think they're becoming more interesting, and this is where sort of, well, I'd probably say we're involved in a very small way, I would say,
Yep.
at the moment. But I think about, companies like Cyprium, right, which have had, significant expenditure on Nifty, which has been a bit of a graveyard in the
Yeah.
past, mind you.
Yeah.
But it's at times like this where we're seeing supply shortages that may push up the copper price in the future. That's when these sort of projects, will offer that promise of exceptional rewards, assuming that the management team are able to execute and they can get it funded and restart goes smoothly, etc. But those are sort of probably the more obvious candidates, I guess.
The talkie stock, that one, isn't it?
Yeah, exactly, exactly. But I mean, you've got to be obviously conscious about what you're investing in, and how the economics work, etc. But like going back to something like Havilah, Trav, that you mentioned, you look at the fact that, well, once upon a time they were in a sort of joint venture with Oz Minerals, right? And
Yeah.
that sort of demonstrates that, well, maybe there could be, some decent potential there, right?
Well, I agree, and that's why I own the stock. But I also think there's another part of that option JV with Oz Minerals that isn't immediately obvious, and that's that option was part of the defence strategy when Oz Minerals were trying to negotiate an uplift from BHP, so that they could, well, look, whatever the sky high MPV of this is, we've got to get an uplift, and they did get an uplift eventually. But I don't know if Oz Minerals were motivated in the near term to actually move there, but it does point out that it was probably the best of a bad bunch, if that makes sense.
Yeah.
Like I do think Cavill is probably better than Rex, and we saw what Rex went for. Like,
Yeah, exactly. Yeah, that's right. So there's plenty of opportunity, I guess. But yeah, you've got to pick your battles. Like, Sandfire is obviously the sort of high quality exposure on the bourse, and but it's valued accordingly, right?
Absolutely. Should we wrap up with an underrated, overrated?
I reckon we should, mate.
Off the top of our heads. Okay, I'll kick it off. First up, underrated, overrated, Manny, ionic clay rare earth projects.
Overrated.
Shareholder activism.
Underrated.
Gold at $3,700.
Underrated.
Hard rock lithium.
Ooh. I would say neutral.
Australian government support for downstream processing in our nation. Think of
Yeah, I think commodity dependent,
okay.
I would
Nuanced.
say.
Yeah.
Yeah.
Falcon Metals.
I would probably say overrated.
I'm not sure if you've had the chance to look at this one, but a little tin play, Stella.
I would probably say overrated.
Taking every meeting that a broker tries to put in your calendar.
Oh, overrated.
Or taking every interacting with every kind of retail punter who might reach out to you.
Oh, okay. I think overrated.
Inflation concerns, specifically in Australia.
Underrated.
Foreign capital moving into, like, taking strategic stakes in Australian assets.
Underrated.
The importance of having a major strategic shareholder when it comes to an up-and-coming mining company or junior developer.
I would probably say underrated.
Money Mine podcast.
Underrated.
Going to conferences.
Oh, I would probably say overrated because I haven't gone to one yet. So
Interesting.
yeah,
Yeah,
You haven't gone to any.
no,
yeah,
no,
yeah.
never.
Nice work.
I like your different views on doing things. Like I do remember the very first time we spoke, you kind of were pretty public in saying, yeah, I don't really meet with management too often. I like to make my own views. Maybe,
Mm.
and I also think maybe that's changed a little bit over time. But you were not afraid to just do things a bit differently.
Yeah, I think that that is probably been relatively consistent. So I think that um, I prefer not to meet management a great deal until we have a position.
Yeah,
But then, if it's a large position, then you want to be sort of really uh, you want to have knowledge of want to back good people of good character and all the rest, and with the right sort of uh, incentives and urgency, I guess is probably the right word for it. So I find that it's very valuable once we've determined that we want to we want this in the portfolio for a decent time horizon. That's when you really get the value. But to make the investment decision, it's the same situation.
Have you ever had that process, built a significant position for your fund, met management, and then reverse your decision?
No.
do you think it's overrated the way that funds under management can impact returns?
I think that you have to be conscious of your capacity, and that because ultimately that's what determines the size of company that you can
Yeah,
look at, get involved, take seriously, all that sort of thing. So if you're running sort of like a, let's call it sub 100 mil, or even sub 50 mil, that's when your micro caps become probably more attractive. And it goes the other way, obviously. There comes a point when it's like, well, you don't invest in the largest, most liquid sort of exposures.
and my last one, it's not really an overrated, underrated, but I just want to know, like, if you look back over the every new investment you've made over the last, like, call it 3 years,
Mm.
what is the most common way that you get idea generation?
Yeah, that's a good question. I think that um, we read, a hell of a lot. I think that we get a lot of benefit in just staying on top of the market news, just ASX, reading ASX releases every morning, right? Can get a real sort of sense of how companies traveling, um, sort of the sort of ambitions of the team. That's sort of something that isn't mentioned or talked about a great deal. But ultimately, all these companies are run by people, right? And you have to have that right sort of, everything else can be perfect. But if a management team doesn't have ambition, that's, it'll never work out basically. So that's what I found. And, in terms of idea generation, you've just got to be really you've got to be really involved in the present, I'd say, not only in the market sense, but what's happening around the globe, right? Like we've seen this become so prevalent that the market moves so much due to what the, what the commentary of President Trump is, right? Every day it feels like almost, but and that's a very stimulating environment for an active manager and for an active investor. So I think that's where you sort of get the best returns by, keeping a constant pulse on the market and what's happening in it.
Manny, your results speak for themselves. So appreciate you coming on. It's always great to chat. And yeah, thanks for sharing all your thoughts with us.
Yeah, no worries, guys. Thanks so much.
There we go, mate. Another fantastic bit of insight from a favourite fundie of money of mine, Emanuel Datt. And it's all made possible thanks to our fantastic partners, Sandvik Ground Support, Focus, the platform by Market Tech. Check it out now and get your tickets to iMark, October 21 to October 23. Investors go free.
We'll see you at iMark.
Hooroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read out a disclaimer.